Google is paying back £130 million in back taxes in the UK, but Apple could soon be asked for billions by European authorities. Are we about to see a showdown between Europe and US tech companies? To discuss this with me is John Gapper, FT columnist. John, last week you were the one who revealed the news about Google's deal with HMRC. This has been rumbling for a long time. Give us an idea of what got us to this position today.
Well, the Google deal really just involves the UK, and it's whether or not it's paying enough on its rather large UK-based revenues. And there's been a real debate about that with tax authorities, and they've come up with what sounds like a compromise deal: pay a bit more, 130 million back taxes, and we'll settle it. But that clearly hasn't settled it at all in the minds of British politicians, taxpayers who still feel ripped off, and there's a general sense of disquiet and unhappiness.
And this goes across Europe. The French and the Italians are looking at Google's and their back taxes, and Apple have flown into, Tim Cook, the chief executive of Apple, flown into Brussels to discuss this issue recently. What's happening across the US tech scene about this issue of taxes in Europe?
Well, France and Italy are trying to crack down and really impose much higher local taxes on Google. Meanwhile, the European Union has launched this large investigation into whether or not the arrangements between Ireland and Apple and Amazon and Luxembourg were illegal state aid. And if they rule that, then Apple could be asked to pay back billions in back taxes to Ireland. And that, I think, is going to set off some really serious issues, not only between companies and governments, but between the US government and the European Union, and we could see a really enormous fight.
And tell us about this enormous fight. Your column recently has really gone into this. You actually see this as a seminal moment. The consensus on how corporations pay tax around the world could be about to fall apart.
Well, there's been a framework which has been essentially in place since 1928, and it's a framework that says most profits are taxed where the value of the company lies. So, for example, with Google, theoretically, most profits are taxed in the US, relatively less in other countries where it operates around the world. That's been the framework. But it's actually starting to break down, because the Google case in the UK and in France and Italy is telling you that local taxpayers are saying that's not enough. We have to have more. The sales are here. And if that happens, I think we're heading towards a situation where you just have a battle between different countries to take more locally. And that's going to undermine the basic framework of global taxation.
And companies like Apple and Google, they say, look, we're just abiding by the rules. I mean, will the changes, if this global showdown happens and we get this kind of country by country fight, will they actually end up paying more tax?
Well, they probably won't. I mean, they say they've obeyed the rules. There is a bit of a problem here, which is that tax is supposed to be levied where the value is created. In practice, by transferring intellectual property to Bermuda and offshore entities, they've levied the taxes there. Well, nobody, I think, thinks that's a matter of substance. So there's been an awful lot of stretching of the rules. But if we really start to move towards a formula for tax that isn't based on intellectual property and value, but is based on local sales, well, they may not pay it more overall, although it will be harder to avoid those sorts of taxes. But where those taxes get levied will be shifted. And the US in particular is not going to be happy about that, because it will say, we've got a lot of companies that create a lot of intellectual property, create a lot of brand value, and other countries are trying to steal this value in terms of taxing locally. They are not going to be happy about it.
John, thank you very much.